Welcome back. Indraprastha Gas Ltd reported its quarterly numbers, and to talk about the same in detail, we have the management with us. We have Kamal Kishore Chatiwal, Managing Director, Indraprastha Gas Ltd, joining with us. Mr. Chatiwal, thank you so much for giving your time to ET. Now, my first question to you will be on margins trajectory. Although margins have expanded on a quarter-on-quarter basis, but we have seen compression in the margins on a year-on-year basis. Now, what led to this, and what are the strategy going ahead?
Yes, you're right that on a sequential basis, there has been improvement in margin. But if you analyze deeply, actually, in the last quarter, we had a one-off addition of 118 crores from, trade margin settlement with OMCs. So if you exclude that, our margin expansion has been to the tune of 34%. 34%, because that would be in the 5 to 8 range. Now we are above 5 to 6 range, and in this quarter we are at 6.16, and our long-term guidance remains in the 7 to 8 range. And we are mindful of the fact that recently PNGRB has come out with a landmark tariff order, wherein the CNG transport and domestic segment would be in zone 1, and we are expecting that would help us in getting in the long-term range of 7 to 8.
All right, and since we're talking about margins, let's also talk about EBITDA per SCM. That declined by about 15% in the quarter gone by to come in at 6.2 rupees. If you can give us any guidance for the next coming few quarters, where could EBITDA per SCM stand in the second, third and fourth quarter of this year?
See, in this quarter, we are hopeful that we should be above 7 rupees. We should exit the quarter in the 7 to 8 rupees range. Now, if you look at that, the gas cost, in the first quarter of last year, the 72% was the allocation of APM, and which is now currently at 34-35%. If you add new well also, that is also 44-45%. So due to that reason, there has been an increase in the gas cost, and to the tune of 3.6 rupees per SCM. So that has impacted the margin, although we have taken some price rise, but fully we have not been able to pass. But with this tariff order, which is likely to be notified shortly, we expect to come back into the 7 to 8 rupees range, which has been our long-term guidance.
All right. Now, since you spoke about price hike that the company undertook in Q1, and also because you are expecting EBITDA per SCM to rise going forward, any price hikes on the cards which you would want to talk about?
So I think if the tariff order, we are expecting that to be notified in next 3-4 weeks. So if that is in place, then there would not be any need for price hike. Rather, if some of the states do rationalize the VAT, we may look at reducing some of the prices, especially in the UP state, where there is discussion with state government to rationalize VAT. And in case that order comes, then we are looking at reducing the prices. So overall, for IGL, the price hike is not on the cards. Rather, we are looking at rationalizing some of the prices.
Okay, so no price hikes on the card. In fact, prices could come down. That's the word coming in. But Mr. Chatiwal, if you can tell us, was there any impact of global gas price volatility or domestic APM gas cost changes on profitability in the quarter gone by? And what's the outlook when it comes to global price changes in the next few quarters?
You see, if you compare it from first quarter of last year, we had more of APM, but that was hitting the ceiling. First time in 2 years since the gas price has been notified, the APM price notification is there. It came below the ceiling at 6.4. Now, again, it has hit the ceiling. So we expect the gas price to, because it is linked to crude, and crude is now above 70, 67, 70, 72 range. So we expect that to hit the ceiling, APM, and some increase in, the new well gas, which is 20% of APM price. So that to increase slightly. But the Henry Hub, fortunately, has remained steady at around 3.1. So we expect that to continue. And overall, the gas cost should remain it is more or less stable if you look at from the last 1 year point of view. it is more or less stable, and we expect it to continue to remain in that range.
Okay, so the stable cost is expected to continue moving ahead as well. Let us now talk about the demand trajectory, particularly for the commercial PNG segment and the industrial segment as well. Are you seeing demand recovery in industrial as well as commercial PNG segments?
You see, demand driver for IGL would remain the CNG segment. And with the, the landmark order of PNGRB, the government's focus on CNG transport domestic, the rationalization of tariff. So that should help us, bring in more customers, especially in areas outside of NCR, where, the VAT presently is very, very high in UP, around 23-24% if you consider input and output. If that is brought down to 10-11% and we pass on the benefit to the customer, so that should help the conversion to CNG vehicles. Regarding domestic is also doing very, very well, that we are adding 3.5 lakh connection every year. So 10-12% growth is there. And industrial and commercial also, especially in the outside NCR areas, there has been we are in discussion with various industries, and we have been able to convince them to switch to this cleaner fuel. So we should see 10-11% growth in both industrial and commercial segment.
Okay, and since you're also saying that demand continues to remain very strong, if you can tell us what will your volume growth guidance be for the full year FY26?
So 26 would be ending, I think the last quarter at 10 million. So we are at 9.16. So 10-11% guidance would be there, and we are hopeful to achieve 10 million.
Mr. Chatiwal, how are you seeing the transition of autos from petrol, diesel to CNG post fuel price rationalization?
You see, in Delhi, almost 100% autos and taxis are on, CNG. And outside GA, yes, the conversion to autos is taking place, especially in UP and in Rajasthan GAs. In other smaller GAs, the number of autos is limited. So even if they convert, the impact on the overall volumes may not be that high. But yes, as a fuel, it gets popularity, and it gets tagged in as a mass fuel, mass market fuel. And those vehicles, passenger vehicles, taxis, autos, they get converted. So in that sense, outside of Delhi, yes, we would see conversions of autos and taxis to CNG.
And Mr. Chatiwal, also can you tell us what will your Capex plans be for FY26, and especially your expansion plans in new geographical areas that you're focusing on in the National Capital Region and other states? What will those be?
You see, our Capex for the core segment this year would be around 1,300 to 1,400 crores. So this quarter, we are in more or less in line with the last year. And in addition to that, we are looking at some of the diversification. So combined Capex would be around 2,000 crores number would be there. And that includes the CBG, LNG, and maybe some solar project. So total would be around 2,000. Out of that, 1,400 would be in the core and 600 in the diversification initiatives.
Absolutely. Mr. Chatiwal, thank you so much for